Hello everyone, I welcome you all on behalf of JK Shah classes to this indirect tax amendment lecture for November 2022 exams. Now, we will be handling these amendments through the statutory update book which is released by Institute on its website. This book contains amendments of May 22 as well as November 22. We'll be focusing on November 22 amendments because May 22 amendments were already covered in the previous amendment videos. Now, your cutoff date for November 22 exams is 30th April 2022. So my sincere request to you is stop reading newspaper and other articles related to amendments which are made in the month of July, because those amendments will not be applicable for your November 22 exams. I have seen lot of posts which have come on this particular aspect saying that sir, July amendments, will it apply to November 22? The answer is no. You know the cutoff date. Cutoff date is 30th April. So a lot of amendments which have happened in last month will not be applicable for your exams. With this, let's begin with the amendments from the statutory update book. Let's see. Now, the first amendment in supply chapter, association and members will be regarded as two separate persons, and a transaction between association and members will be regarded as a supply. Sir, we would always charge GST between association and members. That is what we read even earlier. So what has changed? Now, we used to read this in the same manner as it is today, but with one specific event, things changed a bit. Supreme Court in the judgment of Calcutta Club held that service tax will not apply between association and members because both are regarded as same. So when both are same, service tax will not apply between association and its members. Now, this judgment came in light of service tax, but its implication could have been taken even under GST, and that's the reason government clearly mentioned it in the law that association and members are deemed to be two separate persons, notwithstanding any act or any law or any judgment, and a transaction between association and its members or vice versa will be considered as a supply. So it is to give clarity under GST that a transaction between association and members will be liable to GST. Let's see this provision. Activities or transactions involving supply between any person other than individual to its members or constituents. Constituents are the persons who have made that particular association. For consideration is included in the scope of supply. In fact, if you read it carefully, it is so wide that it can cover a partnership firm and its partners as well. I'll just give you an example. See, supply between any person and its members / constituents. This person, we can take example that it could be an association or it could be a partnership firm. These are examples. Other than an individual. Obviously, these are other than individual. To its members or constituents. See, association can be read with members and constituents, example, can be partners. That means this clause is so wide enough that a transaction between association and members is a supply, plus a transaction between partner and partnership firm will also be regarded as a supply. Possible, sir? Yes, at present government has included it in the definition of supply under section 7. Let's read further. Following amendments have been made in by Finance Act 2021. This was notified on 1st Jan 22. Earlier, supply of goods by any unincorporated association to its members for cash, deferred payment or other valuable consideration was treated as a supply of goods. That was there in Schedule 2, where association to member, if goods are being supplied, it will be regarded as supply of goods. Now that government has given clarity under Section 7, this complete thing has been omitted. Sir, that means now it is not supply of goods, it is still supply of goods. If you supply goods between association and members, it's goods. If you supply service between them, it will be regarded as a service. But now the transaction between these two will be regarded as supply. Schedule 2 used to deal only with classification. It was not levy of GST. It was just classification. It never spoke about whether this will be a supply or not. Now it gives you clarity that a new clause AA has been added under 7.1. Let's see what's that. Activities or transaction by a person other than individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration will be liable to GST because it is included in the definition of supply. And levy of GST applies on intrastate supply or interstate supply. So it is regarded as a supply, hence it would be subject to GST. The above amendment puts an end to the ambiguity. There was a confusion whether activities or transaction involving supply of goods or service by a person other than individual to its members or vice versa will fall under supply or not. This was the confusion and the problem was Calcutta Club decision. But now there is complete clarity. The amendment brings certainty that association and members will be liable to GST. Okay. Further explanation is added to clarify that person, its members and constituents shall be deemed to be two separate persons and any supply between them is to take place from one person to another. So now there is complete clarity. If you see in the footnote, though not required for your exams, but in the footnote, Institute has given a reference to Supreme Court judgment under service tax. This could have had implications in GST, but now it has been avoided completely. So sir, for us position remains same. Earlier also we used to say this is liable. Now also we say that it is liable to GST. Okay. Now, charge of GST. People, two important things in this chapter. Basically, charge of GST covers composition scheme, reverse charge mechanism and your charging section. When we talk about charge of GST, one important amendment has happened under composition scheme. That is what we will be discussing. But one more thing which is important for you is section 9 subsection 5, where e-commerce operator is required to pay tax as if he is the supplier. There also amendment has happened with respect to restaurant service, but Institute has not included it in the amendment booklet. Plus, if we go through the May 22 November 22 module which is there online at present, 9.5 only the provision is there, but what is notified under 9.5 is not included in study material. That means, sir, can we ignore everything which is covered under 9.5? The answer is yes. It would not be required for your examination purpose, but you should know the power of 9.5. What is the power under 9.5? That government can say that e-commerce operator has to pay tax. That power you read for your exam, but what is notified you can ignore for your exam. Sir, what all is notified under 9.5? Transportation of passengers, Ola Uber transactions, supply of accommodation service except where the supplier of service is liable to register, housekeeping services, urban clap, and restaurant service, that is Swiggy Zomato, which was added, but they have not mentioned in this, plus it's not there in module. You can ignore this part completely. You can just lead the power, saying that government has a power that they can notify certain things under 9.5. That will be sufficient for exam. This is one important thing. Second, coming to the amendment. What is the amendment, sir? Now, people, composition scheme was not available for certain manufacturers. Is it, sir? Yes. Manufacturer of some products were not eligible. Manufacturer of which products, sir? There were totally 4 products which were specified. Tobacco, pan masala, aerated water, ice cream. Tobacco, pan masala, aerated water, ice cream. These 4 were already covered by persons whom composition scheme is not available. Correct? Now, government has added various bricks and tiles. That means manufacturers, be very careful, manufacturers of bricks and tiles will not be eligible for composition scheme. And there are different types of bricks, like building bricks, red color bricks which you see, fly ash bricks. Fly ash bricks is grey color big bricks which you have seen in buildings. Grey color big bricks. Fly ash bricks where the content of fly ash is also mentioned. That is again covered under bricks. Plus tiles, every kind of tiles, earthen or roofing tiles. Earthen, you will put it at the bottom, while roofing tiles are used for roofs. That is also covered under this. Now, bricks of fossil meals, the leftover bricks, that is also now not eligible for composition scheme. But remember, manufacturers. Earlier it was only 4 products. Now you have to remember bricks and tiles as well. This is a new amendment which has been brought with effect from 1st April 22. Yes? Let's see this. See, this will also be relevant because similar change has happened under registration chapter also. That I will show you in some time. But I am sure you are clear with this. Bricks and tiles, manufacturers will not be eligible for composition scheme. Let's see. See this. Manufacturers of fly ash bricks, blocks, building bricks, bricks of fossil meals, earthen and roofing tiles, eligible. Circle the word manufacturer if you have a hard copy. Manufacturers. Ice cream, this was already there. Pan masala, already there. Tobacco, it was already there. Aerated water, already there. What has been added is these 4. Fly ash bricks, bricks of fossil meals, building bricks, earthen and roofing tiles. Okay. Now we move on to exemption chapter. Very small changes, yet significant changes. Now, see, there was an exemption when, say suppose, Mr. A providing service to a local authority or providing service to government. What kind of service is he providing, sir? He was providing repair of street light. Now, say suppose he is providing repair of street light service. This repair of street light service is a function entrusted under the Constitution of India. This was exempted from GST. Even today it remains same. Then what is the change, sir? Now, this exemption was available for pure labor contracts, that means only service, or composite contracts where the goods element does not exceed 25%. So majorly it should be a service contract. then exemption was available. This is also same. What has changed is here government, local authority, government authority and government entity was mentioned. So various government entities were claiming this exemption, that we are government entities or government authorities, and there was lot of confusion in the entire industry. You know what government did? Government deleted these two. That means, is the exemption deleted? Exemption still remains as it is, but the exemption available to government authority and government entity is now no more available. That's the change in these two entries of pure labor contract and composite supply. Let's have a look. So we had an entry of pure services, government authority and government entity is deleted. Same composite supply, government authority and government entity is deleted. That's the change. Fair enough. Now coming to transportation of passenger sector. Important, very important amendment, transportation of passenger sector. Say suppose we talk about auto rickshaw. Sir, auto rickshaw is exempt, sir. Okay. We talk about metered cab. Sir, metered cab is also exempt, sir. Stage carriage non-AC. Sir, stage carriage non-AC is public buses, right? Stage carriage non-AC, public buses also enjoyed a exemption. Then contract carriage non-AC, except when it is used for tourism charter hire. Contract carriage non-AC also enjoyed a exemption. For all these services were exempt. Sir, has it become taxable? People, if these four are provided through e-commerce operator, then in that case it would be taxable. That means if you book a auto through Ola Uber, then it would be taxable. But if you book it directly, I mean you go and to the street and then take a auto, then GST is even today exempted. So if they are providing directly, even today it enjoys an exemption. But if it is provided through e-commerce operator, then it is taxable. And sir, who will pay the tax? Government has mentioned that such e-commerce operator would be liable to pay GST. So if it is through an e-commerce operator will be liable, which is actually a service covered by 9(5). But government has not included 9(5) related amendments for you. You can ignore 9(5) notified services. Exemption entry is there for your syllabus. So if it is supplied through an e-commerce operator, these four will no more enjoy an exemption. And remember, it is only for these four. Auto and metered cab, you can take example of Ola Uber. Stage carriage, non-contract carriage, Red Bus. Red Bus is an app where you can book tickets for buses. Again, if you book through Red Bus, then taxable. If you directly book it from the service provider, then it will enjoy an exemption. Clear with this? Only one line added in these entries. See this. One is this non-AC contract carriage, non-AC stage carriage. Nothing contained in B and C. If you notice, nothing contained in B and C, these two, shall apply to services supplied through an e-commerce operator and notified under 9(5). That means in this, if it is through a e-commerce operator, then in that case GST will be paid by such e-commerce operator. So service referred herein are services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle, omnibus. Omnibus basically bus, or other motor vehicle. Other motor vehicle can include auto rickshaw, where e-commerce operator will be liable to pay tax. Earlier this entry did not mention omnibus, did not mention other motor vehicle. These two are added in this entry. Fine, sir. Same goes with metered cab and auto rickshaw. Again, metered cab and auto rickshaw, if it is provided through an e-commerce operator, then it will be liable. This is the change. Clear? Great. Now, when we talk about the next exemption, this exemption was applicable for May 22, where training program 75% or more expenditure is paid by government enjoys an exemption. Same way, national permit, again a May 22 exemption. Leasing of assets, this exemption has been withdrawn. Earlier, leasing of assets by Indian Railway Finance Corporation to Indian Railways was exempt. Now it has been made taxable. So exemption has been withdrawn. Okay. So these were the exemption related changes. Coming to input tax credit, one important change has happened. People, there was a rule 36(4). What did it say, sir? It said that if your supplier has not furnished the invoice or debit note, if your supplier has not furnished the invoice or debit note, then you will not be eligible for ITC. But it also provided a saving clause. Let me give you an example. Say suppose your ITC as per books is 80 rupees. In your GSTR 2B, all your suppliers have furnished invoices worth 60 rupees. Now the question was, how much of ITC can you claim in your GSTR 3B? Let me tell you what was applicable for May 22. For May 22, this said 60 rupees plus 5% of 60 rupees. That means you could take ITC of 60 plus 3, totally 63. And then you will give a call to your suppliers, please furnish the invoice, otherwise I am not getting ITC. This used to happen. So earlier, whatever is coming in 2B, you could take that as input tax credit plus a margin of 5% of the invoices which are furnished was given to you. Now what has happened, sir? This 5% thing is gone. That means if now your suppliers have furnished invoices worth 60, then the ITC which you can take is 60 rupees. Plus, one more amendment has happened in this. Now, this was a rule, but the main section did not have any such condition. Rule said this, but main section did not say anything about it. Now the main section also says it. Now main section, that is section 16, conditions for availing ITC. Earlier there were 4 conditions to avail ITC. Which were those 4 conditions, sir? 4 conditions which were there earlier was, you have the invoice or debit note or tax payment document. Second, you have received the goods or services. Third, supplier has paid the tax. Last one, you have furnished a valid GST return. 4 conditions. You have the invoice, you have received the goods or services, supplier has paid the tax, you have filed a valid return. These were the 4 conditions. Now 5th condition is added. What is the 5th condition, sir? 5th condition which is mentioned is, supplier has furnished details of invoice or debit note in his GSTR 1, that is under section 37, or IFF, invoice furnishing facility. He has furnished that invoice or debit note in GSTR 1 and it is communicated to you in GSTR 2B. That means Now the section also provides a condition that if your supplier has not furnished, then you will not be eligible for ITC. This has resulted in a very, you would say, very difficult scenario for the trade. Reason, earlier we used to fight on quality and pricing. Today, supplier and recipient fight as to whether the invoice is furnished or not. Because if the supplier does not furnish that invoice, you will not be eligible for input tax credit. So now for students it has become simple. Earlier you used to do this 5%. Now you are not required to do that 5%. Whatever is coming in GST R2B, you can take input tax credit based on GST R2B. That is the change. Let me show it to you. ITC can be availed only by recipients if supplier have uploaded, I would better say furnished relevant invoices or debit note in their GST R1 or IFF, invoice furnishing facility, in QRMP scheme, and communicated the same to the recipients in GST R2B. Plus that same thing has come under rule 36(4). So that earlier 5% point is now deleted. Now you directly check. If supplier has furnished, you will get ITC. If he has not furnished, no ITC. Simple. Okay. So 5%, this is now not there. Now if you see registration, people, registration, see, Aadhaar authentication was mandatory for new applications if you want action to be taken by proper officer within 7 working days. Otherwise 7 working days will be replaced by 30 days. Now Aadhaar authentication has been made mandatory for filing revocation application. Revocation for, sir? Revocation for cancellation of registration. That revocation application under section 30. See, if your registration is cancelled under 29, you can file a revocation application under section 30. If you want to file a revocation application, then your Aadhaar should be authenticated. That means if you have not authenticated Aadhaar, you cannot file a revocation application. Is it, sir? Yes. Plus, for any refund application also, your Aadhaar should have been authenticated. But refund, you learn at your CA final. So, you will restrict this particular Aadhaar authentication only for revocation application under section 30 for an order which is passed under 29. Who has to do Aadhaar authentication? Proprietor or any partner or karta of a HUF, managing director or trustee of a board, members of managing committee of an association, and they have to do it for these 3. For filing revocation application, refund application not required at inter level. Again, there are 2 types of refund applications. For both, Aadhaar authentication mandatory. But these 2 points you can ignore for your exam. Fine. Now, say suppose, sir, I don't have Aadhaar. Then if you don't have Aadhaar, you have to give a Aadhaar enrollment ID slip because you should have enrolled, and you have to give one of these documents like passbook or voter ID card, driving license. This has to be given, and within 30 days, once you get Aadhaar, you have to authenticate Aadhaar. That is made mandatory. Okay. Now, this is again an important amendment which has happened. People, you remember 40 lakh limit is applicable for a person who is dealing in goods industry. A person who is dealing in goods industry can opt for a 40 lakh registration limit. Now, this is applicable to a person who is only dealing in goods. But there were some exceptions. Certain people were not allowed to take 40 lakh benefit. Now here important to note, the law does not say manufacturer, the law says supplier, and supplier can cover both manufacturer as well as trader. Supplier of pan masala, tobacco, ice cream, these three were mentioned. Aerated water was not there, even today it is not there. So can I say a person who is manufacturing or trading in pan masala, tobacco, ice cream, for him the limit will be either 20 lakh or 10 lakh. 20 lakh for all states, 10 lakh for Manipur, Tripura, Nagaland, Mizoram. So 40 lakh registration limit was not available for a supplier of pan masala, tobacco, ice cream. Now what has changed, sir? Bricks and tiles are added. Same entry, sir? Yes. But remember, for composition scheme, manufacturer of bricks and tiles. For 40 lakh limit, supplier of bricks and tiles. Same thing. Fly ash bricks, building blocks, bricks of fossil mills, earthen or roofing tiles. That remains same. So what is added is bricks and tiles. So a person who is manufacturing or trading in bricks and tiles will not get 40 lakh registration limit. That means the registration limit for such persons will be 20 or 10. 10 for Manipur, Tripura, Nagaland, Mizoram, 20 for all other states. Clear? Okay, let's see. Enhanced threshold of 40 lakh for registration available to person exclusively engaged in supply of goods will not be available to suppliers. People, careful. Suppliers of fly ash bricks, blocks, building bricks, bricks of fossil mills, or earthen or roofing tiles. This is the change. Same thing. These four have been added. Okay. Now, this one was applicable for May 22. What is it, sir? For filing revocation application, you get 30 days plus additional 30 days extension can be taken, and additional 30 days extension can be taken from commissioner. So, additional commissioner, additional 30 days, commissioner, additional 30 days. Total time period 90 days available for filing revocation application. This was already there for May 22. Okay, same thing, 30 days plus 30 days. Okay, coming to tax invoice, credit note, debit note chapter. What is the change, sir? E-invoice, earlier limit was, if your preceding financial year turnover of any year starting from 17-18 exceeds 50 crore, then e-invoicing was applicable to you. This has been made 20 crores. That means more number of people covered under e-invoicing, sir. Yes. Sir, why do you require e-invoicing? To track transactions, and it is required for B2B transactions and export transactions. So at present, the limit is 20 crores. So say suppose last year or any year starting from 17-18. If your aggregate turnover was more than 20 crore, then you have to generate e-invoices. Fair enough, sir. So that's the only change. It started with 500 crore. Now it is anyone greater than 20 crore. Simple change. Okay. E-invoicing not applicable for government department and local authority. The May 22 amendment. Then dynamic QR code. There have been some clarifications. A very simple clarification. Say suppose, see what is dynamic QR code, people? B2C transactions, if your turnover is more than 500 crores, then the invoice should have a dynamic QR code where you can scan and pay that amount without entering the amount. So the option is to be given to the customer where he can scan and pay without entering the amount. That is dynamic QR code. It was required for businesses whose turnover in any preceding financial year exceeds 500 crores. limit remains same even now. Then what has changed, sir? Some clarifications given by CBIC. What is the clarification, sir? Say suppose you are providing service to a unique identification number holder, UN or embassy. Should dynamic QR code be there? CBIC has clarified that yes, it should be having dynamic QR code, because a person having unique identification number is not a registered person. As he is not a registered person, it is a B2C transaction. As it is a B2C transaction, it has to have a dynamic QR code. The second one is related to persons whom you are providing service who are located outside India. But this provision of IGST Act you don't read at inter-level. So second one you can ignore for your exams. Yes. Okay. E-way bill blocking, again a May 22 amendment. What was this, sir? Basically, only on your outward supply, if you have not furnished 2 GSTR 1s or 2 GSTR 3B, or composition scheme if you have not furnished for 2 quarters, then you will not be able to generate e-way bill for your outward supply. See, you cannot generate. Someone can generate for you if you are a purchaser. As a purchaser, it can be generated in your name, but as a supplier, you will not be able to generate e-way bill if you have not furnished basic returns. Same point as applicable for May 22. Then, okay, payment of tax. A guideline has been issued. See, what was Rule 86A? A special power given to proper officer where he can block e-credit ledger of a person. Say suppose a person is taking fraudulent input tax credit. Then in that case, his e-credit ledger will be blocked. This is the power available for proper officer. Now, CBIC has given some guidelines to officers that please don't do it in every case. You should have a reasonable belief. Just on some assumptions and presumptions, don't start blocking e-credit, because this started happening. Industry was completely taken aback because every time, the moment they found some transaction, their e-credit ledger was being blocked. Then CBIC issued a guideline saying that you should have a strong reasonable belief, and they have also given some grounds for disallowing the debit. Let's see that. The reason for such belief should be based on one or more following grounds. Credit is availed by a registered person where the person who has issued the invoice is non-existent. In fact, this is same Rule 86A language. If the supplier is missing, then e-credit ledger can be blocked. Or without receiving actual goods. You have taken credit without receiving the goods or services. Or the tax has not been paid by the supplier. Or the person claiming ITC is missing. Or the document is missing. Sir, what are these? These are basically the cases where 86A can be taken, or action can be taken by officer under 86A. This has been clarified. The main reason for giving guidelines is you should have a belief, you should have proper documentation as an officer before taking such harsh actions. That's the basic reason. Okay. Then you will go through this as well. Who can do this? Commissioner or officer authorized, not below assistant commissioner. Main important point which we again highlighted is you should have reason to believe, not just suspicion or presumption. Okay. Coming to the last chapter, GST returns. See, maximum late fee. This was a May 22 amendment where maximum late fee was restricted for GSTR 1, 3B and 4. This remains as it is. as applicable earlier. And the second one is with regard to section 44, annual return. See, annual return is not required to be furnished by central government, state government, local authority whose books are audited by CAG, Comptroller and Auditor General of India. In such cases, annual return is not required. This remains as it was earlier. And with this, we come to an end of amendments. These are the amendments which have happened. One point which I would like to highlight is, if you have not filed GSTR 3B for previous quarter or previous month, then you will not be allowed to file GSTR 1. Earlier, it was previous 2 months at one place, but now if you have not filed GSTR 3B for previous quarter or previous month, then you will not be allowed to file GSTR 1. So say suppose April month 3B you have not filed, then next month GSTR 1 you cannot file, that is May month. Same for quarterly returns. Be careful about that one point. I did not find it here, so I mentioned it to you. Previous quarter, previous month, 3B not filed, you will not be allowed to file GSTR 1 or invoice furnishing facility. Wishing you all the best for your exams. Take care. Do well. See you all. Bye.